Now, the only way to become a successful trader is to copy someone else's strategy, right? Unfortunately, it's just not that simple. Although someone else may be profitable with a particular strategy, doesn't mean it's going to be successful for you. It's extremely important to personalize your strategies to suit your trading style, the way you want to manage trading, and the way you want to balance your life with trading. And that's what we're going to be discussing today. How can we, as beginner traders, learn a strategy, create a personal strategy to help us become successful traders in the long run? What is going on, guys? It's Thomas here. Now, I am an aspiring Forex trader. I've been learning to trade for over 5 years. I've gone through all the hardships, all the battles to get to where I am today. And today I want to discuss with you guys how you can create a personal trading strategy that is sustainable and profitable in the long term. Now, obviously the easiest way to start is to find a trading mentor, someone else who is profitable in the trading industry and someone that you can help to recreate a particular strategy with. Now, there are obviously thousands of profitable traders out there that are doing the right thing. Now, how can we learn from these people to be able to help to understand how the markets move and take our own personal behaviors and add this to their particular strategies? Now, each and every individual is different. The way that we read price action is going to be completely different for every single trader. Not everyone is going to trade the same way, and that's what makes the market move. There's different indicators and different variables which people have different preferences and biases on the market, and that's what creates price action, right? It's the behavior of those involved. So how can we implement our behaviors to create a profitable strategy within the market? And to start with, why would you even create your own strategy? Why can't I just go and copy Pip Daddy over there and just copy his strategy because he's making money, so I can too, right? But unfortunately, that's just not the case. To start with, there's a thing called edge bias, and although the Forex industry is a massive market, edge bias says that over time your edge on the market will begin to evaporate. And just like any business, if you don't continue to improve and implement different strategies, your edge and your business of trading will begin to deteriorate over time. Now, this isn't as big of an impact in the Forex industry, but what is the way that you implement that trading strategy. Now, like I said earlier, each person and each trader will see the markets differently, and you might not see the markets the same way that Pip Daddy sees the markets. So your trading strategy might not be as profitable as the way that Pip Daddy teaches it, but you can take the fundamentals of that strategy and create something for yourself and the way that you see and trade the markets. And the fact that it's personal as well will have an impact in your confidence in that particular trading strategy. I know from experience that if I go and test someone else's strategy, and it's not something that I've created myself, if I begin to go into a drawdown, I will lose a lot of confidence in that strategy because the belief just isn't there. It's not something that I've created myself, it's something that I've copied off someone else. And how do I know that they're actually making money from this as well? There's a lot of heroes out there in the trading industry, and sometimes you have that doubt and self-belief if it's not something that you've created yourself. And that's why I highly recommend to personalize your trading strategies, that way that you can have the confidence and self-belief into what you're doing. You spend all the hours back testing the strategy and creating that particular strategy, so you therefore have the confidence and self-belief in what you're actually doing. And secondly, personality. Everyone sees the markets different. You might be someone who likes the fundamentals and the economic parts of the reasons why currencies move, and someone else might be very technically minded and they like the way the indicators work and the way that price action moves, and that's how I particularly see the markets. So it just depends on the different personalities of people, and that's why there are thousands of different profitable traders out there and many different trading strategies out there. Not everyone's going to be the same, so it's important to see where you fit in the realm of traders and find something that suits the way that you look and the behaviors of how you see the markets. I have a pretty good example of this during my trading history. So one particular strategy I tried to trade was a very indicator heavy strategy by a trading educator called No Nonsense Forex. So he's got a pretty big platform on YouTube, and I've watched all his podcasts and videos, and he's definitely a great successful trader. But the way that his strategy works just isn't something that suits the way that I understand the markets now. It's very indicator heavy, and I just didn't understand the reasoning behind how the indicators work, and that's something that I personally like to delve into. I like to really understand exactly of every single piece of what I'm doing and why it falls that way. And I back tested the strategy, I found a profitability in the strategy, but I just wasn't able to execute the strategy with full confidence when taking it to the live markets. And that was just because I just didn't have the self-belief in what I was doing. It didn't feel natural to me. And that's why I found a strategy that kind of suits a bit more of what I like, and that's more price action and not many indicators, not much economic and fundamentals. It's mainly just in the way that price moves and different biases in the market. And that just suits the way that I like to trade more. Not only with the way that I read the markets, but also the times that I can execute trades and working around my work-life balance as well. And thirdly is performance. So although the strategy may be profitable, there may be other ways and different elements you can add into that strategy to make it even more successful. Everyone sees the markets through different eyes, so there may be a particular indicator or something you want to add onto the strategy which may actually enhance the strategy and make it more profitable. Not everyone's perfect, and just like any business, you've got to keep improving and adding things on to continue to be profitable and relevant. So in the particular strategy that you found, what are the different ways and different elements that you may be able to add and tweak that strategy to make it even more profitable? Alrighty, so the first step of making a personalized trading strategy is to find a base. Find an educator or different information that you can use as a base for the fundamentals of how you see the market. So if you're a technically minded trader that likes the way price action moves, or you like using Fibonacci or indicators or whatever it is, find something that you have a belief in the market and find a strategy and a mentor that you can use as a base. So if you can start testing a particular strategy by someone that you're following and find that it is profitable, it's a great base to start with. Then from then, it's all about modification. It's all about putting the hours in back testing and testing different elements and different indicators out and seeing what kind of effect does it have on the bottom line. Does it reduce my maximum drawdown? Does it increase my returns? What effect does the different elements add to the existing trading strategy? By starting to backtest a different strategy, it will also help what's called your reticular activating system. Your RAS helps with your pattern recognition. So if you continue feeding your brain with the same trade entry, stops and targets, over time it'll become increasingly easier to be able to see the different patterns in the market. So being able to do this obviously helps to minimize the amount of time you need to trade, and it helps you to recognize those particular patterns and particular entries a lot easier. So the different ways that you can personalize the strategy, you can look at starting from your entry technique. So there's a different entry technique or different candle patterns that you could enter into onto the trades, and how does that affect the profitability of that particular trade. The stop placement, is there a particular indicator or Fibonacci you could use to look for the stop placement that you currently have? And then targets as well. Can you extend your targets? What's the MAE, maximum adverse excursion, in regards to the way that the price moves against you, or maximum favorable excursion? How far does price move towards your targets? And use this type of data to modify the trades to suit the style that you're looking for. And one of the easiest ways to personalize strategies is trade management. So trade management is once you've entered the trade, executed the trade, how am I managing this trade? If it moves towards my stop, is there a particular price action which happens? That means I can exit the trade before stop. If price moves a certain area towards my target, is there a particular way that I can move my stop loss closer to break even or into profits? How can you modify the trade once you've entered into it to maximize profitability and minimize risk? An example of this is I trade what's called shooting stars and hammers, which are daily biases on the daily, so particular candle patterns. And I'm very aggressive with the way that I manage my trades. I like to move my stops quick if they are going towards the green and in my favor. And this is the way that I've maximized the particular trading strategy that I have. I've got a particular way that I manage my trades and make sure that I move my stops fast, and I found a technique and a pattern which helps to minimize the risk on each trade, which overall reduces my losses and my maximum drawdown. And I can actually show you this as well as a good example. So we'll head over to the charts and I'll show you exactly how this money management technique has helped to reduce my maximum drawdown. Alrighty guys, so I'm here on my trading spreadsheet for a recent strategy that I backtested. So this is it here, the all section, and just to show you how many trades that this particular strategy has gone for. 942 trades I backtested. So that's over 15 different pairs. And if we go across to my results here on the right, so this here is my total P&L. This is for R, so 1R equals 1%, so it's basically for trade management, it's a 209% return over a 4.5 year period, and for without trade manager, it's a 316% return over a 4.5 year period. Now the reason that I've actually decided to go with the trade management part here rather than with the without trade management, even though there's a 100% return difference, is the maximum drawdown. So the maximum drawdown is basically the biggest peak from peak to trough in your equity curve. So if we go over here, this is my equity curve for trading. This one here is with no money management. So this is the 300% return one. And you can see here, there's some pretty big drawdowns in here. So if you look at this period, so this is from say from October 2019 to August 2020. So it's nearly a 12-month period where I lost a significant amount of money. It worked out to be about over 30% over that time. And that's a pretty brutal drawdown. And it's not something that I want to continue to take over a long period of time. And again, up here as well, from October 2020 down to August 2021, so a 6-month period. And again, another pretty significant drawdown. That one was, what are we at? That one was $20,000. So it's about, say, 20% drawdown again as well. And although we have a pretty good run going in from 2020 through to 2021, a couple of peaks and troughs, but some pretty significant drawdowns in there, and not something that I'd want to be continuing to take on a regular basis. So if we change this over and look at the actual returns when looking with trade management, and again for this strategy using no trade management, the maximum drawdown is 36, or say 37%, which is basically you're going to be down a third of your account balance at one particular time without this 4.5 year period. So let's change this over to look at the with trade management. So I'll just change this across to the results when I'm looking at trade management. Let's do that, and let's go like, no, let's bring this down through everything, and this will be updated to the new one. And again, if we go down here, my maximum drawdown goes from 37% to 12%. So basically just over 1/10 of my account balance will be in a drawdown at the one period of time. And again, if we go up to the equity curve, wherever it went, there it is, equity curve, it's a lot smoother. We do have those peaks and troughs and some drawdown periods, but it's definitely a lot smoother than what it looked like on the other chart before. So this one in here, for instance, that first drawdown, which was 30%, started in October and ended in the following August. This one starts at the start of November and ends in the month of April, the next month. So it's just under a 4-year period. So sorry, 6-month period. So it's significantly smaller than what the other one was, and it's just a smoother curve. And I'd rather my equity curve be smoother, although the return's not as great. If you're down 1/3 of your account balance, it's pretty hard to have any confidence and self-belief in what you're doing. So that's just one example of how I've personalized this particular trading strategy to make it suit my trading beliefs more and to help with my profitability. And the other technique to help to personalize your strategies is to backtest. Now, I've spent thousands of hours backtesting different strategies, and although not all are profitable, the hours have definitely helped me achieve a profitable strategy, which I can now have full confidence in when trading live. It's extremely important to backtest. I always say, but it's just like a professional athlete. They put the hours in training and nutrition and all these different things to help them perform on game day. Backtesting is that example for traders. You need to backtest, you need to be able to see the profitability of that strategy. You need to have the confidence and self-belief in what you're doing, and the easiest way to do that is to begin to backtest. If you understand the profitability of your strategy, if you understand the maximum drawdown that you have and different drawdowns that you may have occurred over the years, it'll help you create that confidence in your trading system. Alrighty guys, that's my thoughts on how to personalize a trading strategy, why it's important to add the personal tweaks into a trading strategy to suit your trading style better. Now, thank you so much for tuning in. If you do have any questions on how to personalize a strategy or any questions about trading at all, please feel free to comment down below. Thank you again for tuning in, and I look forward to seeing you next time.